We've got a question from Lewis in the audience who asks, for a graduate leaving university, how would the panel suggest the best way is to pay back any loans or credit card payments? So not your student loan, which will be taken from your salary, but overdrafts, loans, credit cards. Alvin, what's the best way to start trying to pay them back when you're in your first job?
I would always try to pay back the thing with the highest interest rate, because it's dragging you down the most. Organize them from highest interest rate to lowest interest rates and focus on that top one and get it, pay it off as soon as you can.
So I think there often is a good argument for consolidating your debt. I think it very much depends on what interest rates are applying to the debts that you have and whether you can reduce, therefore, your overall interest burden. There's also, of course, an issue about your personal cash flow. So there can be a real benefit in consolidating into a single payment, which may therefore be able to spread out your borrowings over a period that better fits with the rest of the things that you have to spend.
Don't forget that your student overdraft, although it's probably got a 0% interest-free period that will probably last for 2 or 3 years after you've graduated, at the end of that time, it will shoot up probably to about 16, 17%. So you also need to begin chipping away at that, because if you don't, you still have an overdraft of £3,000 and suddenly you're being charged 17% on it. You know, that's a big difference between gradually paying that off during the interest-free period so that it's much smaller, if not totally eradicated, by the time you will lose those graduate terms on the account.
I think sound budgeting is really important, and that's an easy thing to talk about, not necessarily an easy thing to do. And there are some really good tools online. So most of the banks will provide you with a budgeting tool as part of your current account, but there are lots of other online options.
There's lots of debt advice charities out there. And people think they can only ring them up when they're in real problems with their debts. But actually, they'd much prefer people to ring up when they're not, when they just have a query and they can sort their debts out, rather than you get into a mess later on.
Always look very carefully as well at the way in which you're borrowing and whether that's fit for purpose for you. So if, for example, you have an outstanding balance on your credit card and it's turned into long-term borrowing, that's going to be very expensive, and it's not the way in which you should be borrowing money over the long term.